Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading. I want to bring you a little bit of a weekly prep video. There's lots happening in the market. We want to make sure that we're prepared for it. Success in life is a product of design. We design it, then we execute it, and that's what we're trying to do here during the weekly report. So, kind of looking at the week coming up here in the marketplace, you're looking at the E-mini contract for the S&P 500. The question on everybody's mind is basically, is this breakout that we had last week right above this level of resistance, is that breakout legit? That's the question. That's the $64,000 question. If that breakout is legit, you can see the market really kind of run into the 2150 area pretty quickly. And that's about 60 points up from where it is today. If it doesn't, it can run back down into 2000, which is about 92 points from where it is today. So the question, once again, on everybody's mind, is that legit? Well, technically speaking, it is. Absolutely. You cannot debate the technical analysis behind it. The market closed up above resistance. That is a breakout. However, you can look at some mitigating factors regarding whether or not the strength of the breakout is something that you want to trust. Number one is volume. As you can see, as the market is breaking out, we do have a below average volume, and so we have a little bit of a drop in volume right there as the market is running up. So you have a drop in volume, market runs up. That does not support the notion that that breakout is legitimate. You also have the market that has ran from, right around this level here at the 1990 mark. So the market has already ran 100 points. Can it really run another 60 points before we get a nice solid retracement? Coming back into the history here, from this level in terms of this breakout right there, from that level to this level, that ran about 1900 to 2000. That's about 100 points. Looking in the past from this level here, 1870 to 1950, that's 80 points. And then it runs from 1920 up until 1980, that's 80 points. This one ran from 1810 up into about 1900. That's 90 points. So out of the most part, you run about between 80 and 100 points on most movements in the market before it starts to come back down. The only one that didn't really do that is this one that went from about 1850 up into the 2075 mark, which is about 225 points. So outside of this historical run that we had last October and November, the market doesn't typically run that far without retracing. However, I will say this: the last 2 weeks of the market, kind of the mindset of the market, the feeling, the mentality, reminds me a lot of the irrational market that was in October here than it does some of these other normal market cycles. So, in my estimation, I don't know yet if it is legit. However, you can't argue the technicals. It did break out, and then earlier today, it tests down, can't come back down, and goes right back up, and that says something to me. Just given the fact that the market wanted to test low. It had a lot of negative news yesterday regarding the Europeans and the Greek bailout situation. And a lot of this movement last week was based on, the Greek and the Europeans, coming to some type of solution. But now we're seeing the market say, you know what, we don't even care if they don't, and we're gonna go back up. So, it does lead me to believe that this is a legitimate breakout, especially the strength coming in into today. I would like to see a little additional volume on the movement. Hopefully we see some of that later on today. But based on what we're seeing, it is legitimate to have a slightly bullish bias in the market. Well, let's go look at a couple other things very quickly. Let's look at our commodities. Silver. A lot of talk recently that the commodities are back. Yes, we want to stockpile commodities, ladies and gentlemen. Absolutely 100% we want to stockpile commodities. But I've said this for a long time. The commodities are not back yet. Not until the market starts to turn and not until the dollar starts to go down will commodities be back full front, which means I'm still neutral on commodities. However, I love selling naked puts on silver and gold and oil and natural gas and those types of commodity-driven ETFs. Silver getting beat up pretty big time today, down over about 1%, a little bit more than 1% today. Silver is already down. In fact, it's down approximately 5.34% just today. That is silver down 5.34% already, just getting slaughtered. Look for silver to come into 1550 mark down here. I do have naked puts at the $16 mark. I will sell them now down at the $15 mark, and I will start stockpiling as it goes down to sell covered calls. Looking at crude oil kind of hitting into this resistance zone that it's had for the last week and a half or so, right there at about the 52-53 mark. Crude oil down just a hair so far today. In that we're looking at down about 1.9% in crude oil today. This bearish downtrend is not over in any capacity. Looking at the gold futures down big today. Look for gold to come into the 1170 mark. It's currently at the 1200 mark. Some people in the past have thought 1200 was a little bit of a support resistance level for it. I don't really see that. I see down at 1140 all the way down here, and then you have a short one there at about 1170. And I look for those commodities to continue to come down to a certain extent. And then you have the dollar index. And as the commodities go down, the dollar should go up. But right now, the dollar, the last couple weeks, 2-3 weeks in the dollar, it really hasn't wanted to do anything. And I think we're kind of waiting for the international situations to kind of play out itself a little bit. But I'd like to see the dollar break out of one way or the other before we start taking aggressive action on that. And I'll talk about that in the currency report here in just a little bit. But outside of that, guys, that's kind of the technicals behind the market to a certain extent. Also in the market this week, starting on tomorrow, we got a little bit. It's not a huge week from an economic standpoint, but you do have the PPI report, which is the producer price index. It is an inflationary report. You also have on Wednesday the Fed minutes. That's going to be a big report, as it always is. And then on Thursday, you have the manufacturing index. So look for those economic reports this week in the market. Look for it to find a direction, and I think we'll know by the end of the week if the breakout is legitimate. But like I said, I think there's pros and cons to it, but price action doesn't lie, and a slightly bullish bias is probably preferable right now. Matt Justice for Tackle Trading. Check us out over there at www.tackletrading.com. Check out the scouting report, the options report, the forex report, the Tackle Top 25, and everything else we got going over there, including the 5-star rated Trading Justice podcast.